USDC, interest rate hikes, Silvergate Bank, and so much more going on in the real world. Is it hard to believe that Bitcoin has been acting volatile? Now, in this video, we're going to be taking a look at the most recent price action, jumping down into the hourly charts, taking a look from a Elliott Wave theory point of view on the analysis for BTC, jumping down into the smart money concepts angle for BTC as well, and take a look at what we think is likely to happen next. Now, as I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. And if you're looking for a bit more from the crypto space, why not check out the Patreon services in the description down below. If Patreon's a little bit of a stretch for you, there's also a join button down below, which will make you a YouTube member, and you can join the Discord server and have access to all the other fantastic benefits that we have to offer for our members. So if that sounds interesting, why not check it out down below. Let's jump right down into this one, though. There's a fair few things we need to talk about in terms of price action for BTC. So here we have Bitcoin paired up with USDT on the hourly chart. Binance is the data source. And following on from yesterday's video, we kind of hit this right on where we were expecting it to, right? So we had this move to the upside, 20,684.30. We can see it right there. This is a 38.2% retracement from the wave 3 low up here. And we can see that we hit the high of $20,686.51. So we basically have this wave 4 complete. We can now see that we're coming down. We're looking for a 5-wave structure inside our 5th wave. And my concern here at the moment is that this might get an overextension. Okay, now an overextension is essentially a 5-3-5-3-5. Now in here, we can see that we kind of have the formation already of a 3-wave structure. So we've got to come up a little bit, and then we've got to come down into a 5th, and then we've got to bounce up a bit more. So ultimately what I'm expecting here is some kind of wave 1, big wave 2 coming back up, some kind of wave 3, 4, and then 5. And that means that we'll probably overextend a little bit deeper than we were kind of thinking that it should have gone to. Okay, so our actual target range for this, we'll see how this kind of plays out. Okay, our target range is going to be between the 1.236 and the 1.618. That's basically this little area just here. 19,289 on the high side and 18,877 on the low side. Okay, so we can see here. Now, when I said it was an overextension, this is because how big this wave 1 is. Because of the length of this wave 1, we're going to have to see a really deep wave 3. And because we're going to have to see a deep wave 3, it means a wave 4 and a wave 5 is going to take us out a little bit lower than this range. So this is typically where it should go, basically 18,877 to 19,293. But chances are we are going to have to actually come down lower than that in this extended 5th wave. Now, it's possible that it turns out that this is a diagonal, and that might save us a little bit, and it might keep us in this little range. But if it goes impulsive, then yeah, unfortunately, we're probably going to come down a little bit lower than that. And I won't be able to give you any kind of price prediction on where that's going to go until that wave 4 completes. So yeah, it's going to be one of those. It's going to be an interesting kind of structure to see how this going to goes. But so far, it's following the rules quite nicely. We have this little move up here, right on the 38.2%. We got rejected and we come all the way back down. So at the moment, yeah, it's a little bit tough because we haven't got a little mini wave 4. So we don't know exactly where the wave 1 is going to go. The wave 2 should be between 50 and 88.2% of whatever this is. So hypothetically, if I were to take that low and the existing high, we'll probably be looking at coming down into this this probably local bottom, like a double bottom kind of scenario. It might trick a few people into thinking that it's going to be bullish there. So if we do that, then essentially our retracement level would be anywhere really between 20,159 and 20,500. Okay, so there's going to be a little bit of something like that. Once that's done, then we can get a wave 3, 4, and 5, and then we can mark this off. Now, if I zoom out of this, and we can kind of illustrate exactly what's been going on there, we have 5 here. We go up in 3. We have a bigger wave 5 or 5-wave structure here. We've got to come up in 3. Now, we would not cross this wave 1 low. So invalidation of a bigger structure to the downside would be 22,722, right? We wouldn't be going higher than that. Essentially, it would look something to this effect. We'd have 1, 2, all of this is 3, come up into 4, and come down into 5. Now, that wave 4 essentially should be 38.2% of the wave 3. So wherever this does end up going, would have that wave 4 typically that we just saw over here up happen on this side. And then we drop down into that final fifth wave. Okay, now all of that could be potentially nested into a wave 3 from this area here, and this is where it gets really tricky. We could go 1, 2, all of that is a big extension into the wave 3, up into a 4, and then down into a 5th, and we can really get this nested down, and it could be pretty brutal. I don't want to talk about that too much just yet because it's not a guarantee, but this one looks like it's going to be playing out. So for the most part, this is where we're kind of at now at the moment. So further downside to be seen, but some volatility nonetheless. Now, we'll expect once all of that is done, a bigger bounce upwards where we can see maybe 22k. I think that's still something that's going to happen, but it is dependent on how low we end up pushing. So if we start getting those extensions occurring within these structures, then it's going to be harder and harder to push as high as we might want it to. Ultimately, this breakdown is something that we've been kind of expecting for quite some time. It's not something that's unusual to us on the channel, and it's something that, you know, with all of this entire structure to the upside, we've been saying for a while now, pretty much from, I'd say that it's pretty much happening from around December. We're pretty confident that we had to kind of come down. Now, obviously, we had the DXY pushing things up and a lot of people calling a bull market, but with no structure to that bull market whatsoever. So we know it was never going to be something that was going to be sustainable long time to the upside. And I know a lot of people are like, oh, well, you know, it's just broken down. Better luck next time, all that kind of BS. Essentially, this isn't something that we take lightly. It's something that's very, very serious to us on the channel. And it's important that we kind of illustrate what is going on here. There's a lot of people just gambling on the market, and there's people who actually are investors in the market, and that's where we sit. Now, ultimately, looking at the structures of all of this, it looks incredibly weak to the upside and looking very, very strong to the downside. Okay, what we were looking for on the way up were all of these impulsive structures that we're seeing to the downside. We didn't see those to the upside, so it's impossible to kind of think of that as a bullish structure, whereas what we have right now is bloody bearish, without trying to swear on the channel here, but like this is incredibly bearish structured to the downside, and therefore our predictions on these low sides still stand, right? Anywhere between $16,000 and $10,000. It's incredibly broad, but that is the Z wave structure. And until we kind of get a good bead on this structure to the downside, I think it will be a zigzag pattern, and it's probably going to take us a lot deeper than we might want to be, considering how much this has already been affected. But it's one of those things. We'll kind of cross that path as it kind of happens. But for now, we can kind of see that we're falling nicely into this structure to the downside. So everything is kind of falling into place. Now, if I take a look at it from a smart money concepts point of view, what do we see? Well, we can see these fair value gaps, these imbalances on the order books. We will eventually, in my opinion, come back and fill them. I don't think it's going to happen right away, though. You can see these things that happen, or these gaps that again get left behind. They can be around for years, but eventually they do get filled out. So what do we see here? We see a bit of a push upwards here. I don't expect this to kind of get filled out at the moment. I would expect that to be a little bit later. As I said, when you take a look at Elliott wave theory, we have this move here. We're talking about one, then we come up. We'll fill that gap on that second wave before doing this. Okay, so now the other thing that kind of with smart money concepts here that we have to acknowledge is we had this minor change of characteristic that turned bullish, and we haven't broken that yet, so I think that will happen later once we drop this low. This at the moment is a weak low, so that's pretty optimistic to think in bearish situations. We do have that imbalance in the order books right here, right on equilibrium. So again, that's something that we'll see in due course. Likewise up here with these sell order blocks as well. We have a very strong high, so very not likely to kind of pierce that. And if we zoom out of this, we can see, of course, bearish major change of characteristic on this hourly chart, and then of course confirmation of that on the way down. What we'll do is once we breach this one, we'll end up with another continuation of that structure, another BOS marked here, or CTS as we would commonly think of it, and essentially would end up with that move to the downside. So ultimately, everything here is very much aligned to what we've been thinking about and what we've been talking about, right? We have these gaps that were left behind back in January. It's been months, but I do think they're going to get filled out, as I was talking about quite some time ago. So nothing unusual occurring here, pretty much standard practice. We are seeing the impulsive structures to the downside, which is exactly what we'd want to see, but in reverse if we want to be in a bull market, which we are not. So ultimately everything here is breaking down quite nicely, and our target ranges are there. Now, obviously, with some of the fundamental things that are going on in the space, do join us down in Discord, because there's a lot of discussions that are going to have to happen here as to whether or not you stay in USDC, whether you go to USDT, whether you go to fiat on an exchange, or whether you put your fiat back in the bank and find another route for onboarding at a later date. Lots of things and lots of decisions that have to be made. Obviously, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it. Fortunately enough, I've never really been a big fan of USDC, and it was only about a week ago that I was saying to our members that it seemed a little bit odd that there were not a lot of USDC trading pairs on Coinbase, for example, when I was looking at it and I was considering moving from USDT to USDC, and I realized actually it seems odd that Coinbase, who is supposed to be really pro USDC, didn't have the trading pairs, so I never went into USDC, fortunately enough. I know Chris holds a little USDC, a little bit of USDT and all those kind of things, but for the most part, I'm back into fiat and I will onboard later. I've done some purchases recently as well, as people in our Discord server will know and our members will know. There's still a lot more purchasing to do as we come down even deeper, but I'm encouraged by thinking this is the final move to the downside in the bear market, and once we actually finish this Z wave, I'm not expecting any further lows in the bear market. So dollar cost averaging on the way down seems to be the most logical approach here at the moment. But as I said, join us down in Discord and we can continue conversations down there. In terms of what we think is going on, it's the place to be. It's the place that we're going to inform everyone of the news first. It's a place that we're going to kind of make sure that our community is the safest. So check out the Discord server linked in the description below. If any of this video seems a little bit odd and alien to you, you don't understand wave structures and you don't understand smart money concepts, check out 𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏 linked in the description down below. And if you're actively trading, why not trade with BitGet? BitGet's offering some cashback offers and some fantastic deposit bonuses as well, up to $8,000. Link in the description below. We're also going to be doing some trading competitions via the Discord server every single week, where you can earn and win up to $100 USDT every single week via the trading competition in BitGet and our Discord server. So check those out in the description below, guys. I'm going to leave the video there. If you found it useful, you know what to do, and I'll catch you all in the next one.